Mastering audit reporting. Audit reports serve stakeholders' ambitions, not just checking boxes. Where do the key objectives of the audit report, as outlined by its authors, align with the overall goals that its stakeholders have established for the organization, and how do these objectives contribute to achieving operational excellence? The key objectives of the audit report, as outlined by its authors, align with the overall goals that its stakeholders have established for the organization by focusing on the identification and mitigation of risks, improvement of internal controls, and enhancement of governance practices. These objectives contribute to achieving operational excellence by ensuring that the organization operates efficiently, effectively, and in accordance with its strategic objectives. One of the primary objectives of the audit report is to identify and mitigate risks that could impact the organization's ability to achieve its goals. The report highlights key risk areas and provides recommendations for mitigating these risks. By implementing these recommendations, the organization can reduce the likelihood of risk events occurring, which in turn can help to prevent reputational damage, financial losses, and operational disruptions. For instance, if the audit report identifies a weakness in the organization's cybersecurity controls, the implementation of recommendations to strengthen these controls can help to prevent cyber attacks and protect sensitive data. This aligns with the overall goal of the organization to operate securely and protect its assets. Another key objective of the audit report is to improve internal controls. The report evaluates the design and operating effectiveness of internal controls and provides recommendations for enhancing these controls. By implementing these recommendations, the organization can improve the accuracy, completeness, and reliability of its financial reporting, and ensure compliance with laws and regulations. For example, if the audit report identifies a weakness in the organization's accounts payable process, the implementation of recommendations to improve this process can help to prevent fraudulent payments and ensure that transactions are accurately recorded. This aligns with the overall goal of the organization to maintain the trust and confidence of its stakeholders through accurate and reliable financial reporting. The audit report also focuses on enhancing governance practices. The report evaluates the organization's governance structure and provides recommendations for improving it. By implementing these recommendations, the organization can ensure that its governance practices are transparent, accountable, and effective. For instance, if the audit report identifies a weakness in the organization's board of directors' oversight of management, the implementation of recommendations to improve this oversight can help to ensure that the board is adequately informed and engaged in the organization's strategic decision-making. This aligns with the overall goal of the organization to operate with transparency and accountability. The achievement of these objectives contributes to operational excellence by ensuring that the organization operates efficiently, effectively, and in accordance with its strategic objectives. By identifying and mitigating risks, improving internal controls, and enhancing governance practices, the organization can reduce costs, improve productivity, and enhance its reputation. For example, by implementing recommendations to improve its internal controls, the organization can reduce the likelihood of errors and omissions, which can help to reduce costs and improve productivity. Similarly, by enhancing its governance practices, the organization can improve its reputation and increase stakeholder trust and confidence. In addition, the achievement of these objectives can also help to drive business growth and improvement. By identifying and mitigating risks, the organization can take advantage of new business opportunities and invest in new initiatives with confidence. By improving internal controls, the organization can make better informed decisions and drive business growth. By enhancing governance practices, the organization can build stronger relationships with its stakeholders and attract new customers and investors. Furthermore, the achievement of these objectives can also help to improve the organization's ability to respond to changing market conditions and customer needs. By identifying and mitigating risks, the organization can respond quickly to changing market conditions and customer needs. By improving internal controls, the organization can adapt to new regulations and industry developments. By enhancing governance practices, the organization can build a culture of innovation and continuous improvement. In conclusion, the key objectives of the audit report, as outlined by its authors, align with the overall goals that its stakeholders have established for the organization by focusing on the identification and mitigation of risks, improvement of internal controls, and enhancement of governance practices. The achievement of these objectives contributes to operational excellence by ensuring that the organization operates efficiently, effectively, and in accordance with its strategic objectives. By implementing the recommendations outlined in the audit report, the organization can improve its risk management practices, internal controls, and governance structure, which can help to drive business growth, improve productivity, and enhance its reputation.